Hello, hello. Welcome. Happy Saturday, everyone. We should be live. We should be all good. Hopefully you can see and hear me. Live in 43 hours. Thanks for the notice. You're very welcome. Bit premature. I didn't realize you get notices that far in advance. But how is everyone? How's everyone doing this weekend? Hey, Gary. Hello, Lucky Me. I'm sure that's not your real name, but hello. Hello. The markets have been doing pretty well this week. We've got the FTSE 100 and the S&P 500. Both have increased over the course of this week, so that's fantastic. Well, depending on how you look at it, I suppose people might want it to dip a little bit so they have more of a buying opportunity. But it's nice to see some green in your portfolio. How are your guys' portfolios doing? Let me know. Are you in the green or are you in the red right now? What's it looking like? Phil, hello. How's it going? Are you having a nice Saturday? Been doing lots of stock research. Has anyone been buying anything interesting recently? Let me know as well. I'm always open to look into new stocks and stuff, what I might want to add to my own portfolio. So do let me know. I'll just wait for a few more people to get in and then I'll jump into what I wanted to speak about. But yeah, let me know. How's your portfolio doing? What have you been looking at? Have you been buying anything recently? For those of you in the UK, we're nearing the end of the tax year. So that's always exciting. People start thinking about perhaps a new ISA provider or, scrambling to use up their allowance if they've got any left. Hey, Eric, how's it going? People are coming in. Hoping for a bit more of a drop, but I definitely took advantage of the drops as they happen. This is really a cool point, actually, because I've literally, before I came live, I literally just filmed a video about like this idea of time in the market. Is it worth doing? And how is it different to just seeing an opportunity and buying? And I do think there's a big difference. I think there is a complete difference between really strategically hoping and trying to time the very bottom and just seeing something go down and using it as a buying opportunity. I do think there's a big difference there. But nice. I'm glad you managed to scoop up some more shares of whatever it was you were buying. This person knows the drill. Hey, welcome. We've got a newbie, guys. I can actually see some new names this time, so that's really, really exciting. But for all of you who, are Patreon members or come and support these lives every week or just watch the videos in general and support the channel, thank you. Honestly, it means a hell of a lot. It really does. Hello, Charles. Welcome. I love that you guys all say hello to each other as well. We've built like a little community on these lives now. Okay, nice. Realty income there. I like it. The monthly payer. Good afternoon, Chris. How are you doing? How's your portfolio? Are we up? Are we down at the moment? What's been going on? Anyway, what I wanted to speak about today is a little bit of a controversial one, I guess. I don't know. Like, I'm going to go through what I think and just some thoughts and just let me know what you guys think. It's this idea of having a very diversified portfolio versus perhaps not having such a diversified portfolio. I guess the first thing to say is that for the majority of people, really diversifying their portfolio makes the most sense because firstly, they're lowering their risk. The more stocks that you've got exposure to, the more funds you've got exposure to, whatever it may be, the more even assets that you've got exposure to, the lower your risk. Because if one is not doing so well, hopefully another is, and it will average out. That's the idea. It's risk tolerance. Secondly, if you have a diversified portfolio, you don't really have to spend ages and ages and ages knowing every intricate detail of one particular stock, if that makes sense. So you don't have to become an expert. You can buy an ETF and you can get exposure to hundreds and hundreds of different sectors and different stocks in one easy way. And you can sort of call it a day and leave it at that. But there's also this flip side as to why would you want to diversify your portfolio to really, really crazy levels when you probably don't actually, you don't actually believe truly and have really strong conviction for all of the companies in your portfolio. Let me explain, because this sounds really abstract. So let's say you have, I don't know, 30 stocks in your portfolio. Okay. Chances are you have a top 3 or a top 2, top 5 that you really, really strongly believe in. And the other ones, perhaps you have less conviction for, maybe you don't know as much about. Maybe there's 1 or 2 that you really spend a lot of time researching, you really have strong conviction for, and you think they're going to go on to do wonderful things, but you feel like you have to diversify. So you have all of these other companies as well. And there's kind of this argument that why would you put money into your 7th best stock or the 20th stock that you think is going to do the best? And why not just put it all into the stock that you have the strongest conviction for? So it's a little bit of a funny one because I see both sides of it. I see the argument of diversification to lower your risk and increase the chance of you having a market average return. If you sort of match the market through an ETF or through having a really diversified portfolio, chances are you're going to get a market average return. But on the flip side, there's been loads and loads and loads of examples of investors and even just retail investors, average everyday people that have looked so in depth into just one stock, 2 stocks, 3 stocks, a very few selection of stocks. And they know everything there is to know about that company. And they truly, truly, truly have such strong conviction for those companies that they just put all of their money into it. And they carry on learning, they carry on learning. You know, they don't really think that they need to diversify, because why would they? They sort of have such strong conviction over one company that they wouldn't see the point in putting their money elsewhere. Like, it wouldn't make sense. So that argument for not diversifying makes complete sense to me. But then equally, I'm like, well, I want to lower my risk and I want to make sure I get an average return. So it's kind of like I see both sides of it and I don't really know where I'm leaning to. But let me know what you think of this. I think it was Warren Buffett that was saying, like, diversification. I don't know what the right quote was, but he was basically saying that unless you don't know, that if you're someone that doesn't want to learn about stocks and you don't really want to do lots of research into financials and stuff like that, then definitely have a diversified portfolio. That makes complete sense. You'd be really silly not to, because then you're just gambling. You're just picking a stock and gambling. But I think he said as well that if you really understand companies and you understand stocks, then it almost makes no sense, and it's almost even sillier to actually get loads of companies in your portfolio rather than just the 3 best. Because I think what he was saying is, there's only like one Coca-Cola. There isn't 50 Coca-Colas out there. So why would you pick a little bit of each of the companies rather than just getting all of the one that's good? I hope I'm making sense with this. I'm going to film a proper video soon where I actually sit down and go through these thoughts. Anyway, let's see what you guys are saying. Loving Vodafone, cheap at the moment. Nice. Not a stock I have in my portfolio, actually. So I don't really follow it, but good. Scooping up some opportunities there. Portfolio isn't doing so well. When you say you're short more than long, you mean like you're a short-term investor rather than being a long-term investor. Hopefully it will start picking up soon. Depends what you've got in your portfolio, I suppose, as to what's doing well right now. Phil. Just been looking at FTSE 250. Not much thought, to be fair. Not much though. Yeah. How's the FTSE 250 doing? Let's have a look. Okay, that's also, FTSE 250 is also up over the last 5 days. 1 month down, 6 months up. Okay. It's good to see that the two big, the FTSE 250 and the FTSE 100 have both been doing really well recently. buy the S&P 500 ETF on Trading 212 monthly in my ISA. I like this approach. This is just so passive and like, you know, it's almost become, what's the word? Like a habit for you. Every single month, you're just buying the same thing over and over again in your ISA, which is such a tax efficient way. That is going to pay off. You've built a habit, do it every single month. You're buying, you know, loads of these different companies and, you know, call it a day. Nice, easy. Hello, hello. Welcome. VHYL. Nice. High dividend yield ETF. It's got some good companies in it, that one, actually. I think it complements the VUSA very well, actually, because the top holdings in VUSA are like Apple, Microsoft, you know, those sort of companies, the big tech companies that don't pay a dividend. So naturally, or pay a very small dividend like Apple or Microsoft. So naturally, those companies don't make it into the high dividend ETF. So in the high dividend ETF, you tend to get the companies that are either so low down in VUSA that it's nice to have them in more of a high exposure in VHYL. And you get some nice dividends with that one too. I buy Lloyd's because I bank with them. This is such a good point though. Like you're saying you're buying something because you have experience in using that service or that product. And that is really important because if you're investing into things you don't understand, then you're kind of, I don't want to say you're setting yourself up for failure because I don't mean that at all, but it just makes more sense to actually put your money where your mouth is. You know, if you're banking with Lloyd's because you think they're the best option out there, you think they're doing well, they provide a good service, good customer support, good app, whatever it may be, then yeah, back that with investing into them. Whereas if you bank with Lloyd's, but you think HSBC are the go-to, one, move to them, and two, it would make more sense then to invest into HSBC. But I like that. Invest in what you know. Welcome to the community that we've built up if you're new. Started my first ISA with Vanguard, investing into Life Strategy 100 whilst I learn the ropes. Nice. Yep, you can't go wrong. I did the same thing. When I first started, I invested into VUSA, and I had some other things as well, but they were all ETFs. They were all really big known ETFs because you know what? I wasn't interested and I didn't know how, and I wasn't ready to start picking stocks. And you don't ever have to be either. Like you can just, you know, you can just invest in ETFs for the rest of time if you want. There's nothing wrong with that. It's kind of got to be what motivates you. But yeah, Life Strategy 100, very, very popular set of funds that Vanguard do. They do Life Strategy 100, 80, 60, 40, whatever. It's basically their own fund that they created where it has a split of equity and bonds. Life Strategy 100 is 100% equity, whereas 80 would be 80% equity, 20% bonds, and so on. I am doing well, thank you. I'm doing very well. I hope you are too. Wish Lloyd's would get to £1, but can't see this happening. Been cheap for many years now. Every single day, I sit and I wish that particular stocks were going to drop to prices that they had been previously, and I could just scoop them all up. But hindsight is such a wonderful thing. And sometimes what you've got to think about is you can wait and wait and wait and wait for months, years, decades for something to happen that may never happen. In this scenario, Lloyd's may never get to the price that you want it to get to again. And if you don't just sort of invest when it makes sense to you and you carry on waiting for something that might not happen, you may miss a long period of time where actually you're just not invested. And time in the market is more important than time in the market, as we all know, as Warren said. So yeah, some things to think about. What's Lloyd's at? Let's have a look. Let's have a look. Oh, 51. Okay. When were they last at £1? Oh, this is in. Okay. Ah, with you. That's in pennies. Okay, well, it works in the reverse as well. You wish Lloyd's would get to £1. The other way round. I'm with you. Hopefully be equal in all portfolios I makes works out easier to look at and control. Yeah, it's easier to control when you have all of your investments in one place as well, which I don't currently. But to be honest, my old Vanguard ISA just sort of sits there in the background and does its own thing. I rarely check in on that unless I'm making like a portfolio update or I literally just want to, but it hardly ever happens that way. Okay, let's get into the good stuff. I can understand one ETF, but one stock is far too risky. Okay, so it's coming down to risk for you, risk tolerance. Would you argue that, let's forget about ETFs right now, let's just say a stock portfolio. Would you argue that it's more risky to have one stock in your portfolio that you've done tons of research? You know everything about this company. You know, you've analyzed their balance sheets, you've looked at their financials, top and bottom line, you know all their products, like you know everything about this company and you really believe in the company. So would it be more risky to have that one company or to have 25 companies that, you know, you don't really know that much about, you can't really keep up to date with because there's just too many to actually research? Which would be more risky in that scenario? But I do agree with you. I do agree. If you were to have one ETF or one stock, what would be more risky? All about risk. I think we'd all have gone 100% Apple 10 years ago of hindsight. Yeah, this is the thing, isn't it? Hindsight is a great thing. And looking back, I imagine we would all have said we wanted our money in companies like Apple, Microsoft, Bitcoin. What fantastic returns you had if you invested early in on Bitcoin. Wow, I wish I did that. But yeah, it is all about risk. And some people just naturally are okay with taking on more risk for perhaps larger reward. But you made a good point there as well. It could just go to rubbish. Like it might not end up becoming anything and then you've lost all your money. You have your insurance through Lloyd's. Do you invest into Lloyd's, Gary? Index funds are kings if you're a new investor. I couldn't agree more, actually. I think what index funds and ETFs do is that they give the average person that just hasn't got an interest in investing or they're starting to learn the chance just to start investing and understanding the market. You know, you haven't got to sit and you haven't got to pick loads of stocks. You haven't got to research into them. You can just invest into an index fund or an ETF and get exposure to many things. And like I was saying earlier, you can kind of bet that you're going to get an average market average return. Is it true that Vanguard has stopped its client advisor service in the UK? Yeah, I've been seeing a few videos going around about this. I haven't really looked into it yet, though. But I've definitely been seeing a few things. If anyone knows the answer to this, pop it in the comments and I'll put it on the screen. I'll have the bulk of my money in index funds, but I slowly contribute to single stocks to be able to pay my bills. Okay, so are your single stocks, individual stocks, dividend payers? Is that what you're getting at? So you have your ETF and then you have a collection of dividend paying stocks that pay for things. I guess that's what you mean. Yes. Okay. Thank you for reminding me. Diversification. That's Peter Lynch's quote, isn't it? He said, oh, what did he say? Something, diversification. What a fantastic quote that was. Let's actually find what it is. Let me look. Peter Lynch. Diversification. So funny. What did he say about it? I want to know what he actually said. I can't find the actual words that he used. It's online somewhere. Well, it was definitely Peter Lynch that coined the term diversification anyway. I'm invested in Fundsmith Equity Fund for 8 years now, has some good stocks. Not one I'm very familiar with, actually. I'm guessing it has quite a lot of the stocks that you would imagine, the big names. Fundsmith Equity Fund, not sure, but nice strategy. 9 stocks, interesting. See, from like communicating with lots of people that have individual stocks, I would say the majority of people tend to have between like upwards of 20, maybe a little bit more. 9 seems quite low when you compare it, but I don't understand why you would add stocks for the sake of adding them. Like, why not just have the ones that you really like and really believe in, that you've researched about, rather than having, you know, an additional 10 just for the sake of it. I don't know if that was your strategy, Gary, or you've just got 9 stocks and you know, whatever. What's the best site to see when a company pays dividends? Are you a UK investor is the first question. Have you got UK dividend stocks? If you have, there's 2 websites that are pretty good. There's Dividend Data, so Dividend DATA. That will give you the payment dates, and you also will have a dividend calculator on there, so you can work out how much you're expecting. The other one is Dividend Max, so Dividend MAX. If you've got US stocks in particular, there'll be other websites that you can do it on. Personally, for US stocks, I use Seeking Alpha to look at everything about a stock, literally everything, including the company dividend dates. Hey, Adam. Hello, hello, hello. Thank you for joining again. I am having a nice Saturday. I hope you are too. Do you know what? You are a customer of a brand that you like and you invest into it. So hats off to you. I Googled the stock symbol and it will tell you. Yeah, you can just simply Google. You can Google like, you know, let's just say it was Apple dividend date, and you'll be able to find it. What I would suggest you do actually though, is make yourself a little table. So put all of your stocks and go and find when they're going to pay you dividends throughout the year and note it all down, because that way it's all in one place and then you don't have to keep flicking, you know, Googling every time you think about it. Are other people like me where they spend their weekend like researching stocks and stuff? Or is it just me? Yeah, I realize this now. As soon as I looked at the stock price of Lloyd's and it was like 50 whatever p right now, I was like, okay, you mean it in reverse. I went off on a tangent about it being too high at the moment and you wanted it lower, but I didn't realize the stock price. I'm not for too much diversification in my portfolio. There's a real split because the advice that we've all been told from pretty much anyone or any resource ever is that diversification is the most important thing. And you know what? I agree. I agree in the sense that if you don't want to learn about companies, you don't want to look into it, you want a passive way, it makes complete sense. But if you become a little bit obsessed and you start knowing that you start knowing everything that there is to know about a particular company and you build such conviction, I don't understand it the other way. So I think it depends on where you're coming from. And Gary agrees with Adam there. I have shares in Sun Life of Canada since a kid. You get £75 per month. That's nice. £75 a month coming in for doing absolutely nothing. Like that's passive income at its true core. And whoever set that up when you were a kid is very nice. What a great gift. 50% diversified, 50% not diversified. For anyone who's just joined, welcome. I see some new people have come in, so welcome to the live today. We've got great people in here, as we do every week. Everyone is so nice and so supportive, and I love that everyone comments, and it's a good time. We can all talk about stocks and nerd out together. Adam, 50% diversified, 50% not diversified portfolio. So your 50% diversified, is that an ETF then, or an index fund or something? And then you have a few individual stocks maybe? Thank you. Well, thank you for joining, and thank you for subscribing to the channel and watching. Canada, I love Canada so much. So I appreciate you watching. And even if you're not interested in UK stocks, you know, it's great that you're here. So thank you so much. I think, Chris, I think they both were in an interview and they were talking about diversification. So I don't know who said what, but they both said things about diversification before. Dividend data. Dividend data will be your best friend if you're into UK dividend stocks. I wouldn't buy anything I didn't know about or not heard about myself, not used. Same as buying stocks. Yeah, it's that simple. If you don't know it, don't buy it. Spend time looking into it. You know, don't have a FOMO attitude where you've heard someone say one thing, you don't know anything about it, and you think you're going to miss the chance, so you just pile in on something you don't understand. Like, spend time researching the stock, spend time understanding if it is it overvalued, is it undervalued, is it something you want in your portfolio, do you have strong conviction before you buy. Not so true with an ETF, but if you're into individual stocks. The other thing about diversification is that it also should include countries, not just companies. How few people invest in German companies and just buy. Yeah, diversification can be the companies, it can be the type of assets. You know, do you have property, stocks, bonds, crypto, whatever, gold? That's diversification. Where you're investing in the world, that's diversification. There's so many different factors that come into having a truly diversified portfolio. And you know what's crazy as well is that a lot of people, like a hell of a lot of people that maybe aren't interested in investing, have all of their money, all of their net worth in one thing, one asset, and that is property. You know, they have one property, they own that property, all of their money is that property. That's not diversification. Yet no one would ever say, like, no one ever thinks that, and no one's ever like, well, you're not diversified. People are like, property's going to go up, so of course I'm going to buy it. You can argue the same for a stock. But yeah, good point here, Pork Chop, about the diversification globally. There's some really good German companies, actually. You're right. Really good German companies that a lot of people don't speak about. It is interesting. I'm looking at investing in a Vanguard ETF that tracks a lot of the European stocks. Nice. Anyone got any Vanguard ETFs that have a lot of European stocks in them? UK companies plus maybe some other European companies. Obviously, there's the FTSE 100 ETFs, but that obviously is UK-based, UK headquarter companies. You could, I was going to say, you could also go for a global one, which will give you exposure to the UK market, the American market, European market, everywhere, emerging markets. Really depends what you want. Just go onto the Vanguard website and have a look. I'm pretty sure you can actually select the areas and it will come up with the funds available. Warren Buffett has a quote about diversification that other YouTubers like to show. Yeah, I've seen a lot of them. They're really good. I'm going to put together a video on this because I think there's a lot to say and I want to structure my thoughts about it and actually make a video. Only because I think that, like I said, I'm all for diversification, but I think that a lot of people don't ever sit and think about the other side of it. And I think with anything in life, it's really important to actually challenge yourself and think about what the other half of the argument might be. So I'm going to make a video. Many big S&P 500 companies make more revenue ex-US, which provides global diversification. Yep, yeah. This is the thing, isn't it? Like, there's some companies, some US companies that are just a league of their own, absolute league of their own. Whereas you could invest in many companies that are nowhere near that one company just to be diversified. Yes, but people wow. Yeah, you can't live inside Vusa. It is correct. But I'm just trying to point out that a lot of people don't have a diversified portfolio. They just have the one asset, which is the property that they own, and that's it. And then no one ever questions that in terms of diversification. That's all I'm trying to point out. But yeah, I wouldn't try and live inside Vusa. Not sure how that one would work. Okay, 50% FTSE All World and 50% particular pitch shares. That's kind of what I do at the moment. Like I have ETFs for the diversification, lower risk tolerance, getting exposure to everything reasoning. And then I also have individual companies that, I believe more in than other companies. %100% into Vusa. With Vusa, you are getting diversification for sure, like 505 or whatever it is, US companies. These are companies that are US companies, but they just operate globally. So I would argue that it has got quite a lot of global exposure. Individual stocks are indeed dividend payers. Nice. I like that you're viewing it as using your dividend paying companies to actually pay for your lifestyle. I think that's what we were speaking about, right? If not, I'm sorry. These comments come and then I forget what I've already said. Is anyone at the point of their investing where they're actually living off their dividends or living off a portion of their stock being sold each year? Hello to the new people joining. All world excluding UK ETF is great too. If I don't know who has this fund, Knowledge Seeker, I don't know if this is one of your ones, but would you also balance this with UK stocks or a UK ETF, or you just don't want to have any UK exposure maybe? I found diversification pointless as whenever the markets go down, every asset class goes down. You tend to get at different points, different times in the market, like different types of what am I trying to say? Like during different economic situations, different sectors tend to do better than other sectors. So I think that there are occasions where like tech stocks will be doing better than banking stocks, and consumer good companies during a recession might be doing slightly better than airlines, for example. So I think there are times when one sector's up and another sector's down, one asset's up, another asset's down. But yeah, I think diversification is something that a lot of people love, and then some people really, really disagree with. I mean, it depends on your risk tolerance as well. I don't think that some investors could sleep at night only having one stock or two stocks. And you don't really want to be stressing over your investments because it's something that you ideally want to do for such a long period of time that it needs to become as motivating and as easy as possible. If you're only spending, say, £100 a month, would you buy some Unilever or GSK, or would you stick to cheaper shares? I would buy what I believed in the most. I wouldn't think of it as I must buy the cheapest option because I only have £100 a month. If you have a platform that accepts fractional shares and you can just get however many shares £100 worth, whether it's 0.8, whether it's 2.1, or whether it's free, it doesn't matter, then I wouldn't worry too much. And if you can't, and if your platform doesn't allow fractional share buy-in, then I would just save up your money and buy into a stock that you really believe in when you can. I wouldn't think of it as I wouldn't base your decision on what you can afford. I would pick what you want first and then just go with that. And as to Unilever or GSK, I personally went for Unilever out of those two. That was my personal decision, but that's not financial advice. That's just the one that I felt I wanted in my portfolio. If anyone wants to leave an opinion between Unilever and GSK, make sure you back it up as to why you think one is better than the other, because we want to be as helpful as we can here. But yeah, leave them and I'll put them on the screen. Okay, sorry, you were replying to someone else. I thought you were Toronto. Canada has some absolutely, like we were saying with German companies earlier, there's some really, really fantastic Canadian dividend paying companies. You've got two amazing railway companies. Again, look into them on your own. Don't just take my word for it. And many, many financial dividend paying companies in Canada that are really, really, I don't think many people really take note of them. And I think people should. Vusa still trading at a premium with inflation being incredibly sticky. Yeah, you could argue that Vusa is very overvalued right now. I just when I was buying Vusa, that was my only investment that I was making. I just set up on Vanguard like a direct debit, and every month I would put X amount of money into Vusa and just left it at that and didn't really take interest into whether it was up, whether it was down, whether it was overvalued, whether it was undervalued. Every single month, this amount of money just went into Vusa and it was done with. And that meant, of course, that some months I was getting less shares for my set amount of money and other months I was getting way more shares. But over the course of like a certain amount of months doing that, it kind of averaged out. Dollar cost averaging. US equity index and okay, nice. Where's the other percentage coming from? So you got 60% in US equity and 21% in all world apart from UK. And then I wonder where the rest of the percentage is for that one. It sounds very diversified though. The 9 stocks I invest in all pay dividends. I don't buy stocks that don't pay dividends. A dividend investing lover over here. I like it. I personally love dividend investing and I find it incredibly motivating, but I also have interest into stocks that don't pay a dividend. But I think it's whatever motivates you and whatever you believe in as well, I think, as an investment strategy. But yeah, you can definitely do both. Like you can have dividend funds, dividend stocks, along with maybe some growth stocks or some value stocks that don't pay a dividend. You can mix and match, but yeah. Small caps are trading at 2 times revenue. Some are even profitable. I don't really have any like exposure to like small cap. I do have, again, this is not something I invest into now, but in my last year's ISA with Vanguard, I do have global all cap. So that has like some of the smaller cap companies, but as individual holdings, I don't really. Chris, what's your favorite small cap? Let us know. That would be really cool to be living off your dividends, but I'm far too young and still working towards that. Yeah, me too. I am not at the stage where I'm living off my dividends at the moment. my plan is to have a collection of dividend paying stocks / ETFs that will basically be able to cover my general expenses, cover my mortgage, my rent, whatever at the time, cover my grocery bills, any outgoings I have regularly every single month. And then to round that off, I think I will also, these will change, but this is just my idea right now. I'll also withdraw a little percentage of my total portfolio that will not just be dividend stocks to top that up. So maybe 1 to 3% of the portfolio will be withdrawn each year, plus the dividends that I've managed to have over the course of investing. And together, them two things should be able to sustain my life. That's the plan, but who knows what will happen in the future. Through doing this YouTube channel, I've managed to connect with quite a few different people, and some of those are dividend investors. And it's insane. Like, some of these people have got to a point now where, there's millions and millions of dollars or pounds in their portfolio. But more impressive is that just in a given month, these people are being paid thousands of dollars, just passive income, just being, and they're living off that now. So they literally see, their bank go up by $2,000 every month or whatever it may be. That's crazy. FTSE outperformed the S&P year to date. Yeah, it has. It's absolutely crazy. Is the FTSE 100 performance over the course of like the last year or whatever it's been, 6 months, it's been crazy. There's no other words for it. Outperforming the S&P 500. I am still shocked. I think the FTSE is starting to go down a little bit from its all-time high that it reached, but it's still doing very, very well. The FTSE being so high, is that putting anyone off buying FTSE 100 ETFs at the moment, or are you just still going in and not really caring? FTSE UK 100 ETFs. Okay, cool. Gary's been living off dividends for 8 years. That's impressive. That is impressive. So you've got 9 dividend stocks and you're now able to live off those dividends. Amazing, amazing stuff. A diversified house. I love it. 40% bedrooms, 20% kitchen, 20% bathroom, 20% lounge. Overweight financials. How can you not be with this high rate environment? Yeah. Have you got any particular companies in mind, Chris? Hello, I just joined your channel. Thank you. Thank you for joining. Welcome. Anyone that's new, thank you for coming to this and just supporting the channel in general. Absolutely amazing people are part of this channel that comment, that communicate, that join in with things, just secretly watch as a fly on the wall and like videos. We have the Patreon members. They are insane, and I talk to them on Discord every day. The channel is nearly at 5K. I started this thinking I would never even get to 100 subscribers, not even 10. So it blows my mind. And I just love investing, and I love learning every day about it and then sharing it with you guys. So again, thank you so much. Quick question. Would you suggest just investing in high yielding dividend ETFs or individual dividend stocks? Obviously, there's both sides, meaning fees with ETFs or transaction fees for individual stocks. Okay. Not financial advice, but I think it depends. It comes down to this. It comes down to a couple of things. One, do you actually want to pick individual stocks? Like, do you want to spend time researching them, learning about them, and deciding whether you want to invest into that company? If you do, then brilliant. If you don't, stick to ETFs. The next thing is, do you have conviction for some companies over others? If the answer is yes, I like this company, this company, this company, this company, whether that's 5 or 15, individual, fine. If not, again, ETFs. What you could also do is you could have a dividend ETF as like the base of your portfolio, and then you could have a few individual stocks that perhaps you just like a little bit more than the average. And what that does is, even though there'll be duplications most likely, so you'll have an individual stock that you also have in the ETF, by having it as an individual holding as well, you're basically just increasing your exposure to that stock by a little bit. So you're just basically saying that I believe in this stock a little bit more than the average in the ETF. So I'm just going to bump up my exposure a little bit. Pros and cons to both for sure. There's fees involved for both, but it really just depends. Like there's no right or wrong answer. There really isn't. Having an ETF is way more passive. You need to do less, but some people really enjoy researching individual stocks as well. Diversify when one sector's down, put your money into it, averaging out as you go. So this idea of when something's down that you want anyway, seize the opportunity, buy it when it's low, accumulate more shares, fine. And I do think that's different, like I was saying earlier, to trying to time the market. I think it's slightly different. Hi, Adam. We've got lots of Adams, by the way. Anyone that's new, there's a load of Adams. They're all great. Hi, Adam. I'm mostly in Vusa, and you bought a little bit of Tesla and BA Systems. Nice. I have every single one of these, so I'm with you on that. I'm a big Tesla fan. I'm a big Tesla stock fan. And yeah, good options there. New from South Africa. Hello and welcome. Thank you for coming. Canadian banks are great for stable, reliable divvies. I don't know if it's just the Canadians, but a lot of Canadians I've spoken to call dividends divvies. I quite like it. Yeah, and you have Canadian railroads in your portfolio. Excuse me. Yeah, the Canadian banks are insane. Like a lot of the UK dividend banks, that they've been dividend payers, they might have a good yield, whatever. But when you start looking at their performance or other things, like they're not as strong as these Canadian banks. Some of the Canadian banking stocks have had such insane performance, plus many, many years of dividend growth, plus good dividend yields, like good financials. Great stuff. Great stuff. And when you say Canadian railroads, there are, let me think. I want to get the two. So one company, Canadian Pacific Railway, and there's another one as well. Is it Canadian National Railway? Yes. Those two companies, I think, are worth looking into. See what you think. Not for you, obviously, you've already looked into them, but just for everyone else. Have a look to see if you like it, either of them. I do think that things need to be transported. So there is a need for those companies. And quite often, how good a company is depends on its demand. There's many other things, of course. Do I think you should buy a gold bar? I mean, it's up to you. Do you think gold is an asset that is going to continue to increase over time? Or do you think, this is what it comes down to with any investment decision. Is there anywhere else? Always ask yourself this question. Is there anywhere else that you would rather your money be? If the answer is yes, you think it will do better elsewhere, then the answer to the question you're asking is no. If the answer is no, there's nowhere else that it could do better, then the answer is yes. That's all you've got to ask yourself. Is there a better investment out there? Just seek the best investment, and that's what you should put your money into. Gold's an interesting one, though, because if you compare it to an S&P 500 tracker, performance hasn't been that great. But some people say that it's a store of value and it will always be there, and nothing will ever, gold will always be valuable, is what some people say. My argument, like, I can see both sides of it again, but I probably am not going to invest into gold right now because of this thing that my money would be better elsewhere. I have BAT in my portfolio, which is my only UK company, but have that in my retirement portfolio, so you're not hit with. Interesting. Yeah, I keep thinking about this withholding tax recently, the 15%, as long as you sign the form, when we invest into US or Canadian stocks or whatever. But what's the percentage if you're Canadian and you're investing in UK stocks? I'd be interested to know that. Let me know what the percentage is. Congrats on going self-employed. That's amazing. Think of your earning potential now. There's no cap. You are the cap. Congrats, honestly. You've opened up a SIP on Vanguard. I need to do some more research into SIPs. I do. I have VUSA and VUSD to balance out the exchange rate between UK and US. I've heard quite a lot of people do this strategy, actually. I have. I don't know, like, I just accept the exchange rate, really. But I have heard a fair few people do it this way. Replying to your question, my work pension of a 19%. Okay, that makes sense. I was starting to worry for you that the other percentage, 19% or whatever, was just like unknown. So I'm glad that they're investing into something for you there. INDI is my favorite small cap. INDI, let's have a look. INDI stock. Indie Semiconductor. Okay, not heard of this company before. Founded in 2007, 400 employees, headquartered in California. Wow, that year to date, guys. I would share my screen, but I need to set it up and I haven't. Just bear with me. Year to date, Indie Semiconductor up 90% year to date. 1 year, 47%, 5 years, 12%, max it out. Okay, yeah. Wow, I understand why you like that company just on face value. I would have to look into it more if I wanted to actually invest into it and do some research. But yeah, thanks for letting me know about that one. Just look at the explosive revenue growth, okay? Forecasted to be profitable. So they're not yet profitable, but they're predicting that they will be good. Get exposure to EV with their chips. Yeah, I like this. There's certain sectors that I definitely want to increase my exposure to. So I'm gonna look into them a little bit more and see what I think. But thank you. Okay, here you go. Someone asked this question. Belly Pork, thank you for letting us know. Someone asked this question earlier about Vanguard stopping the service. So you heard it here from Belly Pork. Do you know why they've done that? I'll have a little look into this. Maybe I'll make a video on it. Let me note that down before I forget. Vanguard. Okay. I wonder why that is. I'm going to look into it. For tax reasons, is it better to invest in my workplace pension than invest privately? To be honest, I don't know. Tax is really, really personal and specific, and there's no way I could ever know the answer to that. Some things to think about is when you have a workplace pension, your workplace is most likely going to match your contributions. Contributions, you know, they're going to match you, which is free money for you, right? That's already a rate of return that's insane. However, what you also need to think about is how much control do you get into what they're investing into, because maybe a SIP's better or investing privately might be better if you want more control. And again, it depends what pension provider your workplace has. So find out a few things. Find out what they're willing to match you. Find out what you can invest in, and do you have the option to change that? Have a little look into SIPs. What you may be able to do is, this is not advice, by the way, this is just me thinking out loud here. What you may be able to do is match your workplace pension so that you're getting that match, and then also maybe thinking about your own pension as well on the side, as in just invest privately and have it as your pension in your mind. Lots of people are very interested in pensions recently, I've noticed. I get a few pension questions. I don't know too much about pensions, but I have my workplace pension. But I'm definitely not relying on that. Like, I don't want to rely on the state pension or my workplace pension. There was a day and an age where private pensions from the workplace were insane. Like, they were so good. They don't seem to be that good nowadays, private pensions. State pension doesn't seem to be very good. So I'm kind of trying to sort myself out as well. Right, Chris, financials. SoFi, JPM, SCHW. I don't know what SCHW is. I know what the other two are. SCHW. Not what I wanted to do. Stock. Let's type in stock, then we'll get somewhere. Oh, Charles Schwab. Okay. Okay. Charles Schwab common stock. Ooh. Okay. I will have a little look into all of those. Oh, I don't know. This is really, it's difficult. There's nothing I can do about it. I go through them and I report them as they come through. But there's sometimes I get like 50 at a time. So it's really, really difficult to actually stay on top of it. Really hard. But yeah, great point, Ocean. Thank you for pointing this out. If you see anywhere on a comment that you've left me, a reply that gives a WhatsApp number, ignore it. It is complete scam. I don't know why they do it. It's really annoying and they're getting more and more intelligent. Report it. I try and report it. Yeah, but just ignore it. It's not me. The only chat I have is either when I reply to comments or my Discord, where I chat to my Discord members every day, but I don't have any WhatsApp group. So yeah, please ignore. Everyone have a good day. I agree, Gary. Thank you. You have a good day too. Researching is a nice part of building a portfolio. Me too. I really enjoy the researching into stocks. I literally am obsessed with the whole concept of investing, looking into stocks, learning everything there is, building conviction, looking into balance sheets. I love all that. And that's the reason why I started wanting individual holdings in my portfolio as well as ETFs. If I start making enough in dividends to pay my rent each month, then I will start calling them divvies as well. You've got yourself a deal. When you or me start making enough money in our dividends to pay our rent, we will only refer to dividends as divvies. That's a deal. Decade Investor, hello. How are you doing? Thank you for coming. What's the time over there right now? It's 5:30 here, so it's got to be like your morning, maybe just the afternoon. For anyone that hasn't watched the Decade Investor on YouTube or doesn't follow him on Twitter, go and check him out. Amazing stuff. The goat, Hayley. 15%. Okay, that's the same as us, but only if we fill in a particular form. W8BEN form we must fill in to get that reduced amount. Dividend Decade Investor. Is this so? Kanto's Hero, did you subscribe to Decade Investor and then you watched our live stream together and you subscribed to me, or is that not the case? I'm seeing all these comments come in saying hello to Decade Investor. Let me put some on the screen. Hang on. Colin. Oh, bye, Vic. Nice to have you here for a short period of time. PBR, any good? He bought a small amount recently. Whoa, that is a very high dividend. To me, seeing a dividend yield like that is quite scary. I wonder why it's so high, and I wonder if it's sustainable. Definitely have a little look into that. Okay, some more opinion on the whole Vanguard saga. They didn't attract the people they expected to. Okay, it's not really a service I ever used, so I don't really know, but I'm going to look into it. Probably make a video if it's of interest to people. If employers offer salary sacrifice, it would be great to maximize your pension. I pay. Oh, okay. Yeah, I just match my workplace. That's all I have the option to do. And then outside of that, I obviously do my own investing. Wait, you mean I didn't send you my Bitcoin? No, I'm not going to double it for you. I'm sorry. It wasn't me. I'm being scammed. I'm sure the Decade Investor can also speak about the amount of WhatsApp scams in comments. It's so annoying. But no, I'm sorry. I'd love to be able to make you rich, but I just can't. Nice. Investing in yourself and investing in your health. The best investment is the health investment. Nice. I need to get myself to the gym. Good reminder there. Banks own us. That's an interesting name. Lots to think about with that one. Greetings. Greetings to you too. Thanks for joining. For anyone who's just joining, we've been speaking about the whole idea of a diversified portfolio versus maybe having really strong conviction and just putting your money into a few stocks that you truly, truly believe in. I personally think monthly dividend really changed my income mindset instead of having only just one saving. So I invested one monthly dividend stock, one seasonal dividend stock, and one quarterly. There's a big thing to be said about the mindset of dividend investing and how motivating it can be. And if that is going to make you show up for yourself and invest every single month or whatever it may be, time and time again, then do that, because the amount of time that you can spend in the market, the better. Oh, thank you. That means a lot. Yeah, I honestly didn't think the channel would get to anywhere near 5,000 subs. So I'm honestly so happy with it. And I hope we can continue to grow and build this community, because so many people in here, well, in here especially, but so many people that comment and stuff are so nice. And as much as they say that I help them, they help me as well, because they leave me things to look into. They have suggestions, they have thoughts that I've never thought about. And I like that. And it's really cool to build a community. So I hope we can keep building it. And yeah, I'm loving doing it. I'm a bit obsessed. So I have zero debt and live minimal. We're going to round up this live very soon because we've hit the hour mark. So if you've got anything else to say, put it in and I'll try and get through it. And then we'll round it up. I have zero debts and live minimal. Live minimal. Learnt lessons, are losing money by mistakes and new cars. Yeah, you've really got to have this. If you are wanting to really build wealth over the long term, you've kind of got to get off the idea of keeping up with the Joneses and this lifestyle treadmill, whatever the words are. You know, where you're constantly lifestyle inflation, where you're constantly upgrading your lifestyle to match your income. If you make $2,000 a month right now, and then you find a way, or you get a pay rise or whatever to make 3,000, that doesn't mean that you should use that extra 1,000 to upgrade your lifestyle, because then you're going to keep going up and you're never actually going to build wealth because you're spending it all. So yeah, good point. You've been commenting on Decade Investors videos randomly for months. Just came across his live and subbed to him. Saw you a few weeks later. Well, on behalf of me and Colin, thank you very much for joining both of our channels. We're both very happy to have you. Not a fan of investing into pension. It will be in line with state pension age within, yeah, it's sad to think about, like, what could happen with pension age and stuff. I think the most important thing you can do is just control what you can control. We can't control the pension age increase. We can't control what the pensions will be. So you know what? Make as much money as you can make. Do smart things with that money. Make that money make you more money. Invest into assets that will make you more money and protect yourself that way. And then whatever happens, you'll be okay. And if the pension becomes good or whatever, then great. But if the pension age goes crazy high, you're not going to get a very good pension. Doesn't matter, because you can retire when you want, because you've built yourself a pot for financial freedom. Nice. Hello, Dave. Hey. You're joining a bit late. We're about to wrap it up, but I appreciate you coming. Yeah, Phil, maybe don't mention Vanguard. Things seem to be happening with Vanguard at the moment. People have been letting me know. I'm going to little look into. Thank you. Thank you for joining. Do I rebalance your portfolio? And if so, how often? Yeah, I try and at least look at my portfolio, sort of every, I don't know how often, but I try and look at it regularly just to see if it looks like it might be overbalanced or need rebalancing or whatever. But to be honest, what I would say as well is that, let's just say, this is going to be made up, but let's just say 60% of my allocation of my individual stocks right now are in the consumer goods sector, but I still want to buy more because I see opportunity there, or those are the companies that I like. That wouldn't put me off. I'm not going to not buy those companies because, oh, I think I should add some more financials. I'm going to buy what I want, but I do keep an eye on it as well. So yeah, I'm going to leave it there. Thank you everyone for joining this live. Thank you for getting involved. It means a lot. Thank you, honestly, just for supporting the channel. If you want to become a patron and get access to the Discord, link will be in the description. Bye, Adam. Thank you for the live. You're welcome. Thanks for coming. We'll end it on the dot. Bye, guys. Thank you so much for supporting the channel as always.